This is Horizon's Middle East and Africa, our top stories this morning. Oil steadies after the biggest one-day jump in almost a year after President Biden rattles markets by saying Israeli strikes on Iranian crude facilities are under discussion. Asian stocks and bonds trading in tight ranges as investors focus on the upcoming U.S. jobs data for fresh clues on the Fed's rate path. Plus, a divided EU set to vote today on a massive tariff increase on Chinese electric vehicles. It's just past 8 a.m. across the Emirates, 6 a.m. here in Johannesburg, where I am. I'm Jennifer Zabasaja. Thanks so much for joining us. It is a busy day, and markets are paying close attention to a number of factors. So let's just take a quick look at where things are trading just ahead of the trading day later today. If we take a look at S&P futures just to start, trading a little bit flat, but Thursday we did see U.S. equities edge lower. Still, the S&P index has traded in a relatively tight range for the past 8 sessions. Of course, we mentioned at the top, markets are anxiously awaiting for that September jobs report later today. I also want to pay close attention to what is happening with the U.S. dollar. The dollar extending its gains, though we're seeing some red right there on the screen right now. But still, the dollar poised for a strong weekly gain, potentially at the expense of other currencies. But we will see whether or not, and of course, what that jobs number has an impact on when it comes to the dollar. And the big story really is oil and what is happening with oil amid heightened geopolitical tensions. If we take a look at Brent crude right now, it is ever so slightly down, but still trading around $77.54 a barrel. We mentioned at the top, we saw a spike in prices following President Biden's comments about those Iranian crude facilities, but also crude is potentially facing some downward pressure from Libya's returning supply to the market. So, we'll still wait to see how that pans out. And of course, oil still set for its biggest weekly gain since early 2023. Let's check in, though, on how markets in Asia are faring. David Ingles is standing by in Hong Kong. Hey, David.
Hey, happy Friday. So, interesting because you outlined perfectly, really, the key themes that markets in the region are trying to discount, and certainly the oil story, and I'll show you a graphic in a bit, really showing up in the equity markets here. In the meantime, though, the broader, and it's slightly misleading if you simply look at the Asia-Pacific index, because that is green mainly as a function of this rally that's resumed here in Hong Kong. As you can see, modest gains mostly across the region. One market that did open up after 2 days of being shut was Taiwan. Because of the weather. We're also tracking this massive move in dollar yen. We're down on the exchange rate today, but we're still flirting in terms of the biggest weekly jump in the exchange rate going back about 8 years or so. We'll see how the end plays out, of course. We did just enter the lunch break over in Hong Kong. Let's flip the page, please, if we can. And so we're coming off a profit-taking session on Thursday. We opened lower and we haven't looked back since, I think is the short version. Volumes are picking up. It's a broad-based rally again in these Chinese equity markets. 80 to 90% of these stocks are still really picking up even further. And before we end on oil markets very, very quickly, funding costs in Hong Kong are going up because of the pressure we're seeing from cash positions into the equity market. Very quickly, I'll leave you with this. Energy plays, as you can see, are playing a bit of catch-up because of this jump, Jen, in oil prices globally.
David Ingles, always appreciate your insight. That's David Ingles in Hong Kong for us. Let's stick with what's happening in the Middle East. Israel says it's bombed more than a dozen Hezbollah targets in Beirut on Thursday, even as G7 nations urged against an uncontrolled cycle of escalation in the Middle East. The Associated Press says Israeli forces also warned people to evacuate more communities in southern Lebanon, a signal it may widen its ground operation. Meanwhile, the region is bracing for Israel's response to Iran's missile barrage earlier this week. President Biden fueled a bit of uncertainty on Thursday when asked if the U.S. would support attacks on Iranian oil facilities.
Do you support Israel striking Iran's oil facilities, sir?
We're in discussion of that. I think that would be a little, anyway.
For more, let's bring in Bloomberg's UAE Bureau Chief, Donna Quraish, and also Bloomberg's Dan Williams, who is in Jerusalem for us. So, Donna, let's just start with you. I mean, what did you make of those comments from President Biden yesterday? A lot of reaction in the market in particular.
Morning. Yes, we saw oil surging yesterday on these comments by President Joe Biden and about what would come next, what we are expecting from Israel. And the question was really straightforward. Would the U.S. support an attack on oil facilities there? And he said, we're discussing that. That alone is very concerning. And this is suggesting that the targeting any energy infrastructure is actually on the table, and that's what the U.S. probably and Israel are talking about. He did the day before say no to any attack on nuclear facilities, so it remains to be seen, and this is going to cause a lot more uncertainty until Israel strikes, and this is why this may cause or stir Iran into a heavier response yet again on Israel. It could target oil tankers in the sea. It could also, and that's probably the worst case scenario, close down a very vital waterway, which is the Strait of Hormuz. And that could also send oil prices even higher and fuel more uncertainty about the spiraling conflict in the Middle East.
Right, and really where it goes next. Dan, can you jump in here? Because Donna was just saying the targeting is perhaps on the table, but the timing is unclear, and that's really seeming where the jitters are coming from. There appears to be a delay in the response. I mean, any thoughts on why that might be?
Good morning. Yes, well, as Donna noted, the very least that we can take away from those comments by President Biden is that the U.S. and Israel are discussing this. So we know there is a degree of U.S. collaboration here, U.S. assistance, presumably a degree of U.S. constraint on Israel as well, certainly given the comments about not striking Iran's nuclear facilities. So one imagines the sides are hashing this out while realizing that the more time passes between the provocation for this retaliation taking place, perhaps the less credibility it would have in terms of reestablishing deterrence vis-a-vis Iran. It's also worth remembering that Israel is in the middle of a 3-day Jewish holiday, a time at which the civil service shuts down and the government doesn't really make public comments. So it could also be that there is really a degree of public closure while the Israelis discuss it, and it's simply not being shared beyond the small discussion rooms at the various highest levels of government.
Donna, happening at the same time is what is playing out in Lebanon, and we saw more escalating violence happen on Thursday. I mean, what more can you tell us about the situation there on the ground?
So in South Lebanon, we have been seeing what Hezbollah is saying. There are clashes between Israeli troops there and Hezbollah fighters. And this is going, as we've seen, it's going to be difficult for Israel to push ahead with this, more difficult than perhaps Gaza, because, you know, with Hezbollah, this is the bread and butter of these groups. It is to fight these guerrilla warfare. It is to fight asymmetrical warfare in those southern Lebanon terrains. And we saw yesterday the Israeli army asking more people in more villages to evacuate, kind of widening that area where that has to be empty. And of course, last night we saw local media saying 10 very heavy strikes hit the Beirut southern suburbs. That's, of course, where Hezbollah enjoys strong presence. And usually when the strikes are that heavy, we suspect there is an attack or targeting, at least, of some high-ranking Hezbollah commanders there. There are rumors that going on about targeting the head of the executive council, Hashem Safiyuddin, who is the likely successor of Hassan Nasrallah, who was killed last week. And of course, in Lebanon on the ground, this is turning into a catastrophe, right? 1.2 million people have been displaced. Damage is very heavy in areas in South Lebanon, in the Beirut southern suburbs, and of course in the Bekaa Valley. And that's pushing people away from these areas and really a burden on a government who really has little to offer there. They're relying on aid organizations. They've asked for about $400 million to help with any support for these communities that have been evacuated. So we're looking at more devastation as this doesn't seem to be abating anytime soon.
And Dan, just finally, I mean, you and Donna have laid out really a lot of the different factors that could potentially determine what happens next in the Middle East. What do you think will be key, though, in the next few days to pay close attention to?
Well, I think Israel's made very clear its war goals. And I think almost a year into this war, the Israelis and the Israeli public will not want to hold fire until they see tangible achievements. Now, that means in Lebanon, for example, a capitulation of some kind by Hezbollah, be it declared, be it de facto. As Dana noted, southern Lebanon is tactically very tricky for the Israelis, unlike Gaza, when they went in on the ground some 11 months ago. The topography there is difficult. It's densely forested. It's been heavily emplaced by Hezbollah, and the Israelis have already taken losses in the first hours and 2 days of this ground push. So the real question is, which side gives first? It would appear from all the mood music in Israel, from the polling, that the Israelis are willing to take this to the end, even at a high price of blood. The big question is how Hezbollah's hold in Lebanon will continue, and whether Hezbollah fighters in the south, even if they lose their leadership, their central leadership in Beirut, would be willing at a more local level to continue the fight to hold off the Israelis.
Yeah, there are a number of things to pay close attention to, which we know both of you will. Really appreciate your reporting this morning. That's Dan Williams in Jerusalem and Bloomberg's UAE Bureau Chief Dana Quraish there for us. And of course, we've been talking about this. Some of the implications of what is happening in the Middle East is playing out in oil. So let's dig into oil in more detail. Brent crude jumping the most in almost a year on Thursday after those comments from President Biden when asked about supporting potential Israeli attacks on Iranian crude facilities. For more on supply risks, Andrew James is joining us, and he leads Bloomberg's Asia Energy and Commodities coverage. So, Andrew, as we've mentioned a few times this morning, I mean, there's so many factors here that are playing into the oil story. What is the driving factor, in your opinion, especially if we look at where Brent crude is right now?
Hi, Jennifer. Yeah, well, we saw a pretty massive 5% jump yesterday, and that was almost entirely driven by these Biden comments. Up until now, prices haven't reacted that much to escalation and hostilities, and that's mainly because most onlookers didn't think oil infrastructure would be targeted, but obviously the Biden comment has changed that. To put a few numbers around it, so Iran is currently pumping around 3.3 million barrels of oil a day. That makes it the third biggest OPEC producer. Citigroup just estimated yesterday that Israel could take out around half of that in a major strike, which would have a pretty massive impact on the market. And then, as your guests have also alluded to, Iran could seek a reprisal for that. It could, in a sort of an extreme scenario, block the Strait of Hormuz, where a lot of Saudi and Gulf state oil flows through. Clearview Energy Partners, that's a consultancy in the US, mapped out some scenarios, and in the worst, that they saw $28 a barrel increase if that did happen.
Andrew James, leading Bloomberg's Asia Energy and Commodities coverage. Andrew, thanks so much for joining us this morning. All right, up next, the U.S. jobs report is due in just a few hours, and the wide range of predictions is leaving a lot of room for surprise. We'll get a preview with Shuaa Asset Management next. This is Bloomberg. We are counting down to the all-important jobs report out of the U.S. Economists are anticipating that the numbers will temper any lingering concerns that the labor market is deteriorating. Let's bring in Aarthi Chandrasekaran. She's the head of asset management at Shuaa Capital, joining us from our Dubai studio. So, Aarthi, we mentioned there is a lot of attention being paid to the September jobs report, but not a lot of consensus about what we'll see. What is the focal point here for you?
I think unemployment rate is the key, but as long as there's no major divergence between the consensus and the actual print, I think the market reaction is likely to be muted. But what we are also looking at is, Jennifer, is the headline payroll numbers. If it's going to be sub 100, that's going to really make the market jump into a conclusion that the Fed could actually go 50 basis points in the next meeting. And if the numbers are more towards the 200, then I would assume that the cuts that has been priced in will start getting priced out. It's also important to watch the job revisions, because this has been a swing factor in the last couple of meetings. So if you see an upward revision in job numbers, that could actually mean a lot in terms of bonds, right? Your 10 years could actually touch 4% in no time. And if you see a downward revision in job numbers, S&P could possibly sell off. So pretty much it's a totality of data is what matters. So we are looking at every single data, because labor market is the key.
Does it affect, though, Aarthi, your expectations for the outlook for what the Fed will ultimately do leading into 2020 or at the end of 2024 and for the rest of 2025? Or are you still expecting somewhat similar expectations that you had before?
Look, job could actually change a lot of things, because at the moment we are talking about a no landing scenario. At least the market is pricing in a no landing scenario. Growth is coming in very decent enough. And if the unemployment numbers doesn't weaken, that could actually change a lot of things, just not from a growth perspective, but also from inflationary perspective. It can actually leave a lot more of cash in terms of the consumers. Consumer spending could still be resilient. Purchasing power of the consumers could still be resilient. So that actually could mean that inflation can be reignited back into the economy. That could actually mean the cuts that the Fed is thinking about doing or market the way it's pricing, it might not actually happen.
And Aarthi, as investors sort of wait for what this print will be, also investors are sort of in a wait-and-see mode when it happens, or when it pertains to geopolitical risk and what that could mean for risk assets. I mean, how are you navigating this current situation, and especially what is happening in the Middle East?
Step up in geopoliticals will definitely have a wider implication, especially on the volatility and incremental risk premium that gets added to these risk assets. But Jennifer, we have to think about all of these risk assets, credits, rates, and equities are richly valued. A bit of shakeup in the valuation is actually positive. What I'm actually looking at very closely is the real impact on the global economy. So as long as there is no physical disruption of oil market, I think the real impact on the global economy is going to be less than what investors are actually perceiving at the moment.
Are we seeing the risk premium, though, fully priced in to these current levels that we're seeing with oil?
Yeah, I think so. I mean, the risk premium could actually go up. I mean, look at the oil market, for example, right? Oil market is not actually taking into account a possible disruption of a global disruption or a physical disruption of oil prices. Suppose if something happens in terms of the future escalation, that could actually disrupt the global physical disruption of oil. That could actually can cause a knee-jerk reaction in terms of oil prices, which is not there in the price, at least for oil. But what that also means is you have a lot of spare capacity from the Saudi and the UAE who can actually come in and pump those oil back to the market. Not overnight, but it does happen over time.
Aarthi, before we let you go, we've seen, obviously, a rally for Chinese equities, which have been welcome for a number of people. Has this changed your exposure, though, to the market?
Not really. We actually took a bit of profits from the Chinese sentimental surge. I mean, stimulus is great. It's a step in the right direction, but doesn't really do much as far as the structural changes in the economy is concerned. They still have structural issues. Equity market valuations, according to us, should follow the earnings growth. As long as earnings growth is not there, valuation should not be actually rallying. And if it does rally, it's all because of value trap, right? We're also closely following the sustainability of the rally, which we think from an economic perspective is also less likely, because you have a consumption which is not actually improving. Your property market is not actually getting any better, and deflationary scenarios still persist. Labor market is okay, but then your youth unemployment is still at 18%. Overall, there's a lot more things we need to see from an economic perspective, from an earnings perspective, before we jump our guns as far as Chinese equity market is concerned.
Fascinating to get your insights this morning. Aarthi Chandrasekaran, head of asset management at Shuaa Capital, joining us in Dubai. Aarthi, thanks so much for that. All right, coming up, divided EU members are preparing to vote on higher tariffs on Chinese EVs. All the details next. This is Bloomberg.
We do not think that tariffs are a good idea. And of course, our automotive industry is still exporting very heavily to China, so that we are evaluating the Commission proposal at the moment. But yes, you are right in saying that Germany does tend to be skeptical about the imposition of tariffs, and this is no exception, but we have not decided yet on which position to take for Friday.
France supports the implementation of this new tool that is basically a response to excessive subsidy regimes that China has used in order to establish dominance in the field of electric vehicles that might threaten our own EV industries.
The German Chancellor's chief economic advisor and the French foreign minister taking opposing positions ahead of the EU's vote today on tariffs for Chinese EVs. For more, let's bring in China correspondent Min Min Lo to dig into this. So, Min Min, how could the vote go?
Yeah, hey, Jen, you just heard two voices there, essentially opposing voices, and the vote could be quite split, although EU officials had seemed pretty confident that they have enough votes to push this through, and the bar is very, very high, I should say, because China will need a qualified majority of 15 EU member states that represent 65% of the EU's population to oppose the proposal in order to avert the tariffs, and so far we have never seen any EU trade measures being overturned in this way before, although we do know that Germany and Spain are two countries that have been quite outspoken about being opposed to these tariffs. You have CEOs of big car companies like Mercedes, Volkswagen, that have been lobbying their government to be very, very careful with these tariffs because the fear is that Beijing could retaliate, right? They've hinted that they could impose tariffs on those cars with large engines from Europe, and these German car makers, they still make about a third of their sales from China, and so there's a lot at stake here. We know that the Chinese Commerce Minister Wang Wentao had been in Europe for a whirlwind tour, trying to convince these European partners to vote against that proposal. Hard to say how it would go, but we know that both sides, the EU and China, have said they will continue to keep those talks going even after that vote. Now, if it's a yes, then those tariffs will kick in November. It's going to be a blow to some of these Chinese EV companies.
Bloomberg's China correspondent Min Min Lo, thanks so much for your reporting this morning on that story. All right, coming up, we hear from the frontrunner in Mozambique's presidential election. That interview is next on Africa Amplified. Stick with us. This is Bloomberg.